Is Bitcoin breaking out on the short-term time frame, and to what extent does the recent release of economic data impact the broader markets? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be reviewing the short-term time frame, discussing the recent price action from a technical and structural perspective, what the price action is telling us right now, what the technicals are suggesting, and whether or not this move has any substance behind it. We'll also be going over the recent release of economic data, that being retail sales and of course producer price index, discussing what they mean, and of course, what the result was and what impact that result could have on the higher timeframes. Before we do get into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, everything you need to stay in the loop of cryptocurrency and Bitcoin. If you're interested in joining our VIP channel, you can join this channel over here with over 600 members. You'll get access to trading signals with exact entries, exact targets, exact stop losses, trade justification, and everything you need to follow along. You'll also get access to group chats, our general chat, trading charter education chat, news and trade setup chat, and of course our daily video and help chat. If you're interested in joining all 5 of those group chats and the main VIP channel, contact me in the pinned comment of the free channel to go ahead and get access and to view our entire trading track record. Let's go ahead guys and get stuck into the video, starting on that market data. So not a lot has really happened in the last couple days. We've seen a slow grind up from Bitcoin. Again, a lot of this short-term move was perpetuated by ETF news. Again, another ETF filing has been, put in by another huge asset manager. This, of course, was Franklin Templeton, a $1.5 trillion asset manager. And again, that resulted in quite a large move up for Bitcoin on the smaller time frame. That large move has slowly trickled forward, breaking through 26.3k, resulting in a short-term continuation upwards. However, this short-term continuation upwards is not really what it seems. We'll be discussing that in today's video. Furthermore, the current price action we've seen over the last few weeks of Bitcoin within this range since mid-August 2023 has by far and large been the most disgusting price action I think I've ever witnessed for Bitcoin in the last 6 years. I wish I was even kidding. It has genuinely been disgusting. But that doesn't stop us, guys. We'll still jump in and still get into it and talk about what is happening. So, economic data and market data. So for market data, 26%, or 24%, sorry, up in liquidations. We're sitting at 63 million. And looking at 24-hour volume, we are at 62 billion, up 5.46%. September is actually currently green, defying the odds at 2.54% in the green for the month so far. Moving on to the historical volatility index, we can see on the 30-day period, the volatility index is trickling upwards, and on the 60-day period, we can see the volatility is slowly still trickling sideways, more or less plateauing. Moving over to our liquidations, we can see the 63 million in liquidations. The vast majority of those actually came from short positions as Bitcoin is relentlessly, slowly pushed upwards, defying all the weakness it has been developing within the charts. We are still seeing a slow move upwards. We'll come back and discuss that in today's video. Moving on from there, we have seen the DXY actually push one more leg upwards into this resistance zone at 105.4 following the release of what we would consider to be incredibly bearish economic data. And that was, of course, the PPI data. I'll bring it up over screen over here. The PPI data, and of course the retail sale data. The PPI data actually came in plus 0.3 from our previous at a result of 0.7%, and the retail sales on month-on-month data came in at plus 0.2 on the month at 0.6 total. So what we're seeing here is we're seeing producer price index and retail sales increase, and these are both leading indicators of potentially rising inflation. We actually did see a few days ago, inflation started to rise again for the first time for a couple months. So what is this all telling us? is telling us that inflation is definitely going up currently, and if it does continue consecutively month after month after month, we could potentially see interest rates follow. And if interest rates follow, that is when we see a drawdown for asset prices. Remember, inflation is good for assets provided interest rates do not rise. If interest rates rise, that is when we see the pullback for the asset prices. So initially, we're not always going to see negative reactions. The only negative reaction we generally see from these news results is if there is a future expectation for interest rates to hike. The expectation for interest rates to hike in the future is what causes the pullback when we get these negative results. But if we still don't really have a very strong expectation for future interest rate hikes, it's unlikely that these bearish results will really have any profound immediate impact on the markets, and more or less it will see consecutive results that follow suit with the bearish narrative that these results are actually setting. So of course, with the current future interest rate hike probability, we are only sitting at 4% of a 25 basis point hike. This is in 6 days time with 96% chance of a pause. And of course, if we do see a hike, that would be very bearish. That would definitely result in a correction for the markets. So 6 days away, it is best to play cautious, reduce your trading volume, reduce your risk moving into an event like that. Moving over to the stock market, we can see the stock market has pushed up a little bit again, nothing too interesting happening here over here. And of course the Dow Jones, again, nothing too interesting happening over here. Until we clear these local highs, we're not really seeing anything too interesting. We still do expect this downtrend to continue in this range, provided we remain below these high points. If we do come down, we are looking for a target over here. Again, if we break over this high point, we then expect one more pump up to retest potentially even this local top point right over here, all the way back at that local high in December 2021, retesting that trend line again before rejecting. So again, watching out for that, watching for the price development over the next couple weeks. Let's go ahead and jump over to Bitcoin. And I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. I'm going to keep today's video short and sweet because there isn't too much happening that we haven't already discussed. But at the same time, there is one thing I want to talk about on the charts, which is this potential breakout on the smaller time frame. We can actually see Bitcoin is potentially breaking out of this downtrending diagonal resistance on the price action chart, on the 4-hour chart over here. I'll go ahead and draw out these points. We have our point number 1, which is our retest up over here in this range of the 23rd on the 23, which is going to be the start of August. And then we have our second retest, which is going to be on the 15th of August. Then we came up and retested that level at 28.2k again. This is on the 30th of August. And it looks like we are attempting to break out of this level right now. If we take a look at the chart from a technical perspective, we can see that we do have a breakout on the price action chart. Okay, we do have positive momentum, but we do not have a shift in volume. The CVD is still lower than the prior retest of this range. This tells me straight away that this could potentially be a fake out, okay? When we are looking for confirmations of breakouts, I look for 3 points. I look for structural, whether they be diagonal or horizontal, so we have that, we've got a tick. I look for momentum, we have a positive shift in momentum here, we have a positive shift in momentum here, so we have a tick, and then I look for volume. Do we really have that buying pressure supporting this move? And the answer to that one is we don't. We do not have that third tick. So right now we have 2 out of 3. This would classify, according to my own risk satisfaction, this would be a high risk breakout, meaning it has a high probability of actually developing into a fake out. But until it develops into a fake out, a breakout needs to be assumed. So we have an assumed breakout for now. It is a weak breakout. The data is not showing there's a significant amount of strength behind this breakout, and it could potentially result in a fake out and a correction. So to answer that, whether or not it's going to be a fake out, we need to go ahead and drop down to an even smaller time frame and really take a look at what is happening on the chart and look at the trigger points for this price action. So if we break it down to a smaller time frame, we can see Bitcoin has pretty much been relentlessly climbing ever since 26.3k. We saw a retest and rejection as expected to POC, perfect. We came back up. We saw this crazy wick towards the upside. Definitely a liquidity grab. We pushed back down, we found support, and ever since then, we've developed this horizontal, should I say diagonal uptrending support line, which we discussed in yesterday's video. This diagonal uptrending support line has now formed the basis of the price action over the last 48 hours. We've been trickling upwards above this trend line, and finally breaking out of this downward diagonal resistance. We talked about how we didn't really have this strength supporting that breakout a few moments ago. So what are we looking for a confirmation of a fake out? First and foremost, we need to see a structural confirmation. That is going to be dropping below the confluence of the uptrending diagonal support line, which will be point number 1, and point number 2 is a 26.2k to 26.3k horizontal support. Again, if you're looking for early entries, you can take an entry on the breakdown of number 1. If you're looking for a late entry, you can take an entry for the breakdown of number 2. Furthermore, from a technical perspective, we can see that momentum is on the short term starting to fall a little bit. Again, we have a very weak bearish divergence. Again, a very subtle shift in negative momentum, a very subtle bearish divergence. Again, this is still relevant and is still suggestive of, you can guess it, bearish momentum. Okay, it's suggestive of exhaustion. Okay, when we see rising price action, with falling momentum, we have exhaustion. Furthermore, we can also see the CVD has again created these lower highs on our histogram, resulting in an overall trajectory of a downtrend. Again, this is suggestive that as the price has pushed upwards within this range, we are seeing less and less buying pressure, less and less buying volume. As a result, we're seeing decreasing volatility and we're seeing decreasing momentum, all suggestive of exhaustion. And we have seen this exhaustion play out over the last couple hours, over the last couple days. But Bitcoin has still managed to trickle upwards, again, telling us we're seeing an uptrend in exhaustion and the probabilities of rejection are quite high. And that is why I've classified this breakout as a high risk breakout, because we really don't have the technical strength, the buying pressure right now on the chart right now. That could change over the next 48 hours to suggest the price is going to continue any higher upwards. In fact, if we do see a breakdown of this diagonal trend line, we're likely to see a full-blown correction, back towards that POC level. In fact, I would say if we lose this trend line, that would be the probable scenario. Furthermore, we can go ahead and draw in this RSI trend line. We can drag it across from our points of our retest on the price action chart right over here. And we can see we are retesting that point right over here. So we do see in the next 41 minutes, a loss of that RSI trend line, a break below and close below that RSI trend line, that will result in a negative momentum shift and will result in a correction toward the downside. We can also see with that on the short term, the CVD is drastically falling. I'll zoom up a little bit so you can see that a little bit better. And of course, on the market cipher B, we can see momentum has started to shift, right? We're seeing a shift in momentum. This is going to be a shift from strong positive. This area here is strong positive into weakening positive momentum. If we have weakening positive momentum, alternatively, we have building bearish momentum. Okay, we have that as volume is falling as we've approached a level of liquidity that could result in a correction. So on the short term, guys, I'm not actually really expecting this to break upwards. I would say until we get that confirmation of a fake out, expect the unexpected. If we do continue upwards, don't be surprised. But from a technical perspective, it doesn't look like we have the strength behind us to really push that price any higher. It does look like over the next couple of hours, maybe the next day, a correction is more likely than not according to the technical and structural levels. If we do see a correction, guys, again, the POC level is going to be that determining point of support. If we do lose that POC level, whether it be on the hourly, whether it be on the 4 hourly, it's in the same place, okay? We're going to see a correction lower. So again, above that POC level, we do have local support. This is going to be kind of bullish in this range over here. If we lose that POC level, we're entering this bearish territory, okay? We're bearish below. And again, the bearish strength really starts to pick up as we start to lose that 25.6K level, which is going to be our base of support over here. So we have, again, if we zoom in, we have a transition between, okay? I'll show you on the chart. We have a transition between 3 separate kind of ranges. We have the transition between obviously the bearish range, which is going to be below this green line. This is very, very bearish, okay? We have a strengthening bearish range below the POC, okay? We have a relatively bullish above the POC, and we have, of course, very bullish on the short term over here, but this does run the risk of being a fake out. Anyway, guys, I'm going to wrap the video up there. I don't think we need to get into too much more. We've talked about everything I wanted to discuss today. If you want more information about how inflation and interest rates specifically impact the markets, go ahead and check out yesterday's video. Everything in yesterday's video we discuss about how that impacts the markets and what you should be looking out for. In the short term, this is what we need to be looking for. I've described everything perfectly if you guys understand today. If you've got any questions, leave them down below. And of course, thanks for watching. I'll catch you guys in the next one. Cheers.